Hey, while we're waiting for the thing to go off there, ugly water. Just throwing it out there.
What did you call it?
Ugly water.
What is that? Just seltzer water?
It's very tasty water. There's not a plug. I'm not gonna say it live, but I picked some up the other day. Pretty much tastes like soda.
Is this like use code Jazz and save 10% or no?
No, I don't know the people there. I really don't. But I got an ad or something. I was like, okay, they say it tastes like soda. It's not soda, you know. Like there's nothing in it. Zero everything, and it's just like flavored by crushed up cherries. And I mean, I'm not gonna say it's soda, but not bad.
It's a good alternative.
Do what?
It's a good alternative.
Yeah. It needs caffeine, though. You know what I mean? Get the move on. Hey, welcome to the closing beat, everybody. Happy Thursday. How we doing out there? We're in temporary studios here, as you can see, and every day I'm going to share something that somebody has either sent to us along the way or maybe stopped by and gave us on our wall, because this is our studio at the moment. We're taking it back to the old days while we rebuild the good stuff there. So that was actually given to us by Cindy, who actually came by when we very, very first started there, one of our clients there. So awesome. We'll leave that up today. Thank you again, Cindy. It's been a long time, actually. I think 4 years. Also, I got to point out Ernie. Ernie sent us a nice bottle of whiskey here. If you don't know, hold on. Coming to you. 1 second. Still there. Ernie. Ernie's the guy that actually had sent us this as well. Dobie One. Sorry, I do have it still, right? So just sharing that with you. We'll get that up on the wall for maybe tomorrow. Take a breath. Welcome to our show. Tonight, by the way, Wine and Wealth class. The next 2 weeks are going to be rather geeky. If you're interested, if you're one of our clients tonight, we're going to do variable withdrawal strategies, and we're going to have a couple catchy names for them. We'll go through Nest Egg, show you some of that stuff. Hang out, have a drink with me, and chill out. Maybe we'll have a little whiskey there. We'll call it Whiskey and Wealth tonight. Next week, really geeky now. We're going to do the odds of profitability based on a time frame, and this had so much data behind it. What are the odds you're going to be profitable if you invest for 1 week, 1 month, 2 months, 3 months, 6 months, 1 year, 2 years, 5 years, 10 years, so on and so on? Is there ever a point where you could invest money and guaranteed be profitable? That's what we're going to be looking for there. And give you the answer is yes, according to the entire lifespan of the stock market. Yeah, technically, I mean, there is something to look at there. All right, on our research site, if you're interested, jazzwealth.com/research, we did an overview of Kroger. All that's going well right now. Posted a utility stock update there. Huge changes. So give you an idea in the research site, it's utility stocks and the changes going on with them, but then I gave you a list and why you might look at this list and stuff. So got that going in there. And stick with me here today. The research site's $13 a month if you want to join. If you're a client, it's free. But if you want to see the type of stuff that goes in there, I'm actually going to do a research review right here in front of you in just a little bit. That's rather fascinating, I think. So stick with me here for just a moment. Now, stock market today, a little bit lower today. And the headline is, we were a little bit lower because of the taper talk. What's it going to be? No mention of Afghanistan. And you wonder, why would that be? We had a dozen troops killed over there and many others. Remember, I'm just saying what the market does here. This is not my opinion. This is the market. So don't get mad at me for what I'm about to say. The market has no heart. It doesn't care. There is a number to put on everything, and that includes a human life. That's the stock market. That's the way it is. It always has been. So why didn't the market fall apart because of what happened in Afghanistan there? That's because you can assign a number to it right away. You can assign $60.2 million a day to having our troops in Afghanistan for the last 20 years. What is that going to cause if we have to go back there for another month or something like that? It doesn't move the needle as far as the market's concerned. So what happened in Afghanistan, of course, is tragic, and this has been a huge embarrassment in my opinion. But that's okay. It doesn't affect the market. You don't need to see the stock market collapse because of a geopolitical event, of course, that we saw. It's heartless. So remember, until it starts affecting numbers, right? You figure the market goes, hey, 20 years we spent in Afghanistan, $2 trillion. That's not a big deal. We're about to spend $3.5 trillion on things we don't even know what we're going to spend it on yet. So that's kind of how the market looks at it, and that's why you see today is really a reset going into the Fed meeting, not a reaction to Afghanistan. People don't want to be overly bullish or bearish into the taper talk that likely is going to happen to some degree. So that's that. That's just the way it is. I just want to touch on that because I got that question a lot today. Why haven't we tanked? The world is ending and, we messed up the whole thing and everybody's got their opinion. That's the case. All right, let's take a look at the stock market here today. I'm going to start with the Nasdaq. If we go to the Nasdaq, they're still teasing us at getting to the top spot year to date. The S&P leads the way at the moment there. And in the last 3 months, that's where all the action has happened to get us close up there. In the last 3 months, the Nasdaq's performance is 2 times greater than any other index there, including the S&P. Today, if you're looking through the Nasdaq, it's going to be a few standouts if you're interested. Largely semiconductor related. I would like to point out microchip breaking the downtrend here. If we use a chart to pull that, to draw just kind of a crude line here if I can ever get it to work. Got a downtrend in the semiconductors for a while today. It broke out of that downtrend and there's all your action. There's all the excitement. Everybody saw the exact same thing at the exact same time. That's what's happening there. Also, you had semiconductors had a pretty good day today overall. Not amazing, but considering the market being lower, semiconductors higher, awesome. I do want to point out NXPI also hitting new highs. I'll talk about that one in a little bit. You've got Zoom, interesting rejection today. Not a lot of bullish talk here. This stock gapped up and made an attempt to run and was fully rejected by every technical indicator that's there, 20, 200, and 50-day moving average. You're in the midst of a downtrend. That, to me, was an interesting rejection. If you happen to own that, you might want to get prepared for just a little bit more weakness, especially if the market is weak. All right, Booking Holdings, very interesting here. Same kind of concept as Microchip, breaking the downtrend. All the excitement is happening around that technical event for the moment. It was another day higher, but zoom in here. In the ultra short term, the sellers are marking their territory. So each day it pushes up, gets a little selling. The next day pushes up, gets a little bit more selling. Today it tries to push and inch its way higher. The sellers keep just going, no, I've got something to sell here. So maybe a little weakness in the ultra short term for that one. But if you're an investor in Booking Holdings, all is well and looking good there. We happen to own it, so I'm confident talking about that one there. All right, let's go over to the Dow real quick. We're comfortably in third place here year to date for the Dow, about 15% year to date. Just a day of healthy pullbacks in the Dow. I don't have anything negative to say here. Nike, a much needed pullback and a welcome one at that. Travelers, same thing, ran up, touched new highs, maybe spent a little too much energy up there, and that's pulling back, no problem. Walmart has been pulling back. It's actually a very nice looking pullback here for Walmart, and this is all Dow related. Same with Coca-Cola, right? All that Coke and Pepsi through earnings, it was all exciting, and that's just kind of fading away at the moment. It's getting back to its normal sort of slow dividend type life there. And if you look at the Dow, there we go. The Dow third place year to date and not moving a whole lot in terms of the daily range right now. So if you're playing Guess the Dow, maybe something there. Let's see if the mic works. Cody, what do you got?
Yeah, certainly hope that mic works. Today we got a new leaderboard. We got Vanessa, Jerry Lou, Michael, Davin, and Jared. 3 out of the 5 on there are clients, so that's exciting. It'd be a cool day when all 5 are clients, by the way. Like, that would be pretty neat, but 3 out of 5 isn't too bad.
What happened to Duran? Where'd Duran go?
Duran's up a little ways. Duran's a little bit higher. We do have a guess, by the way, at 35,213, but he had a quarter, so he's a little bit higher, but it was a good guess for Thursday. But yeah, Duran's up there. Okay.
All right. Well, there you go. If you want to play, welcome to play. We'll send you a $100 gift card. No strings attached, nothing like that. And I hope you win. Hope everybody gets a chance to win because we play the game every single week. All right. I'm going to go over to the S&P 500 here. If you take a look at that one, also pulling back on the day. Still leading year to date. Today, only 20% of the S&P was higher. Okay. Is that a big deal? Well, it's kind of low. 20% of the S&P was higher. Only 16 stocks in the entire S&P gained more than 1%. So that just shows you broad selling, right? It wasn't like, oh man, these 5 stocks were weak or this sector was weak. Broad selling across the board, it truly was. And that's what you have there. You also have something interesting. This is the type of thing that we share on the research site. I'm going to spend a few minutes just going through it because I think you'll find it interesting. It was a below average day, right? How do you track that? I don't have it up here, so I'm going to put it up here for you. So you can look at your volume of anything really, the volume of the market or whatever you want. It's going to be down here at the bottom. And you can basically put an average on it. Now we're going to use 30 days as the average. I'm going to say, hey, show me the 30-day average in purple right there. And then I just want to know if the volume is above or below the average. So we can zoom in here. We can see by the, oh no, I'm looking at the futures. We've got to look at the SPY. There we go. If you look at the SPY, which is the sort of proxy for trading the S&P index there, the granddaddy of all ETFs, I would say. Did we trade today above or below average? Well, it's below the purple line there. We wondered if that made a difference in terms of performance. So it's one of the things that we looked at. Here we go. We have a couple different scenarios we're going to play here. We are going to suggest that you have 3 different strategies. One is you just essentially buy the market. No questions asked. You're just an investor. You like buying the market. The other is you're going to try to beat the market. You're going to try to do this in a way where you either buy the market at the end of the day if the volume is below average. So today would count, yesterday would count, the day before, the day before. In other words, if you look at that and you go, okay, the market's about to close, we're trading less than average volume, I'm a buyer today, right? Then you're going to flip-flop the equation and say, I'm only willing to buy if the market has above average volume. You might suspect that's a more active day, there was some news event or some excitement wrapped around the market one way or the other. Well, if you look back 1 year, we've plotted each one of those on here for you. Over the last 1 year, if you were just an investor in the market, you're going to have about a 16.3% return. If you bought only on days like today, where the volume was below average, you have below average returns. You did not beat the market. You probably would have been better, or you would have been better off just sitting there holding on and buying the market, dollar cost averaging and such. The green line there is if you bought only on days where the market was above average. Again, you would wait till the end of the day, you would look at that and you'd say, okay, I want to buy. That was the results that we have from there. So there's a 4-point difference between below and above average there. You got about a 2.5% better return than the stock market over the last year if you decided to only buy on above average days. That's just 1 year though. So we went back 10 years. It's a little bit tighter and it's a little harder to show. So what we did is we only plotted the year. See how we're starting here at about 75%? That's because if we plotted 10 years every single day, it looks like this mushed kind of a chart. So what we did is we said, okay, let's get all the data, but let's just plot the last year so we can see the difference here. If you bought the market just generally, you'd have 119% return. If you bought on days that are above average, you'd end up with a slightly better return, 121.1. And again, if you bought on days where the volume was below average, in other words, summertime days, days around holidays, just your average day in the stock market, well, you ended up with below average returns. This is for the SPY, so it's something you can look at. It's an ETF that's obviously tradable. We then did the same for the Dow. We used the DIA for that because that's the most popular one for the Dow. Just out of curiosity, we went to see. Looking back over the last 1 year here, you're going to see a little bit of the same results. Now, look over here, this flat line here. There you go. This flat line is buy on below average days. See how it's flat and there's nothing happening there? That's because coincidentally, right where this started, there were no below average days. So it wasn't a buy. You just sat there and waited. There was an above average day, but there were no below average days. That's why you see the flat line there. All right, anyways, you got your blue, just buy, right? Buy the stock market, invest, and keep going on, dollar cost averaging. You got below average returns. And buying above average, again, generates alpha, or returns that are greater than your benchmark. So 13.73 over the last year. The Dow itself just averaging in 12.4, and basically 11.4 if you bought below average days. Then we look back, we did the same thing just over 10 years here. It's the same concept. The lines look a little bit more squishy, so we put the numbers up top. It's less pronounced in the Dow. Like, it really doesn't matter if you would have just bought the market or tried to just buy in general. I will say that buying below average days in the Dow worked out better than buying above average days. Now, not a lot of people trade the Dow. Lots of things revolve around the S&P 500. I just thought it'd be fun to throw it in there and see. So the short answer there is over the mid to long term, I'm not going to say 10 years is long term, but a good, decent chunk of time, you're better off investing on days where the market shows above average volume. Now, how often does the stock market show you above average volume, huh? Let's take a look. Here is last 10 years, we're looking at every single day in the stock market. And what we're doing is we're saying, show me the above average days and show me the below average days. What percentage of days are above or below average? A really easy one to spot here is July. If you look at July, most days are below average, and you'd probably guess that, right? Middle of the summer, not a lot of activity. In fact, you have less than 25% of the days are above average. So if you were going to do something like this, July would be a pretty boring time for you there. There are actually no periods on the chart where above average days make up more than 50% of all days in the stock market. In other words, for the most part, the stock market is just floating around, right? Average volume, below average volume, nothing exciting. We're digesting news, all is good. There are, of course, a handful of days where it is exciting. Something happened. There's profit taking. There's a news event. There's a war or whatever it may be. So there you can see it. Now you can also see that as you go into September and October, the above average days start to pick up. Right? This is a busy time for the stock market. January actually ranks as first with the most number of above average days, so you don't want to miss January. But then action picks up here for more of an extended period. You have a month here and there that just show up, but September and October show as really, really interesting days for above average days. So yet another reason why I would continue to say, hey, if you're looking at the stock market here and you're wondering, will it ever start moving in a meaningful way again? Give me some backs and forths and all that excitement. Well, yeah, you would say statistically, looking back over the last 10 years, I expect above average days, and I expect those above average days to generate more return than the rest of the stock market or the below average days there. So a little bit geeky there. That's the kind of thing we like to share on a research site. It's the kind of thing that we're trying to put more together for you. It takes a lot of effort. Charlie coding away, doing all kinds of stuff, listening to my nonsense throughout the day. But that's where we're trying to take you. That doesn't tell you what stock to buy. That's not what the research site is. That tells you where's an advantage? Where's a slight little advantage there? Is there something you can do, something you might want to look at? Does it tell you something about how the stock market's performing or about to perform? That's the kind of thing we like to look at there. Data-based events rather than, my opinion is Salesforce is going to do really well. And that's an opinion, right? What good is that? Where's the data behind it? All right, so that is that. I hope you enjoyed that there. A little bit different approach, and I'm going to remove my study that I put on there for you. You can, of course, put that probably on any chart, average volume, or you could just look at it, put a moving average on there. That's all it's really doing. All right, going to the sector breakdown here for the day, you've got energy. I don't know why, Cody, does this sound funny? This is going to sound really arrogant, but I don't know why I kind of expected a round of applause. I was just kind of thinking, you're in person and maybe it'd be a little round of applause there, but hey, it's what it is. All right, we'll go over to the energy sector there. It's really Charlie that would get the round of applause because I just read it off. Energy. Weakest of the day, but has been the strongest over the last 5 days. So no big deal. The fact that it's pulling back here today, you don't really care. If you look at consumer discretionary there, up 12.5% year to date. Today, it was really weak on a handful of names. You got Tesla's a big contributor, so that pulled things back. Dollar Tree with earnings coming out there. Retailers like TJ Maxx pulling back. Nike we mentioned already that pulled back. Other retailers actually, you got PVH, pretty nasty day there, 4.25%, and the Gap in the middle of a interesting downtrend, right? Not one you want to try to pick off, but you're interested here at maybe this thing starting to sure itself up a little bit. Hey, utilities and REITs were at the top. I'll tell you what, you want to know why? Go into our research site. We did the whole thing on utilities. It's the most boring sector to look at, but I made it a not so boring kind of a post there talking about the changes that they're making at these individual publicly traded utility companies. So maybe something you're interested in looking at. All right, new highs and lows. I'll just breeze through it and then take your questions here. 33 new highs, right? Yep, there are actually 2 new lows, right? Just about to the new lows. Campbell Soup hit new lows, and Baxter was the one that just went down there and touched new lows, actually. So put that one extra on the list. You got MTD, right? Not one that gets talked about a lot. Technical pattern here. Just maybe a slight breakout in the ultra short term. There wasn't a lot, if I'm honest with you. I thought Fortinet was interesting, just trading in a kind of a consolidated range at highs, refusing to pull back today. All right, that's pretty strong, trying to show you something there. CDW maybe breaking out. It depends on what platform you look at. I think there was a bad tick here because I don't show it as making a new high, but it does show up elsewhere, so maybe not. NTAP breaks out here. So NTAP's going to be, I believe, earnings related. They beat by 20 cents, actually. Guidance higher. Actually, looks pretty good. NTAP did pretty good there. But they've got a handful of upgrades as well. So sort of an island gap sort of thing. We've talked about that before. You have everything just trading here, and all of a sudden you trade away from the island, right? So island breakaway gap, some people call it. And NXPI, we already covered that one. A breakout right here. You can kind of see the consolidation. I don't like that it used a lot of energy to make the breakout, but hey, it's okay. You know, that's where it's at. It's nice to see a strong stock on an otherwise weak day. Hey, stocks in the news today, and then I'll take your questions. That's right. Coty, C-O-T-Y, up 15% on the day. Says they're going to start to see sales growth quarter over quarter now that people are spending more money on their Calvin Klein, their Burberry fragrances, you know, the really high dollar stuff that these are the guys that make it, really. So good for them. That looks good there. People are spending more money on that and makeup as well. You've got Analog Devices is on there. Why is it on there? Oh, buying back another $1.5 billion in stock, so further helping drive that price up. Boeing moving a little bit lower today. They're getting their 737 MAX back up in India. I think it was India. Good news for them. Salesforce.com comes out with earnings. They're firing on all cylinders, man. 55 cents, better than expected. Raised guidance. Revenue's better than expected. Working in slack there. It just very well-run company at the moment. Incredibly difficult software to use, but very well-run. Dollar General has earnings, as well as Dollar Tree, which we mentioned. Both of them beat on earnings there. Both of them lowered guidance. Dollar General was the one that, well, they both had revenues just as expected. I think Dollar Tree was a little bit weaker, hence the beatdown that it saw today. And overall, it has been weaker than Dollar General. So there you go. What else do I have for you? Tomorrow we've got not a lot. Big Lots really is the earnings, and Hibbett, if you're interested in that, Hibbett Sports. Just a freaking slew of changes in the various indices. CrowdStrike taking the place of Maxim in the Nasdaq 100. S&P 500, S&P 600, S&P 400 changes. Just crazy. And speaking of that, S&P Global paying out 77 cents in dividends there. Yeah. All right, I'll see if I can answer any questions, or if you have any. But there's the clapping. Thank you. It was a cool idea, right? I mean, it's a different way to look at it. I've got another one that I've been waiting to kind of share with you guys as well. So we were starting to look at that concept as well. I'm not at the point where I'm saying, hey, if you have an idea, let's go ahead and study it. What we're doing now, we're working on in the research site, is building out a tool where you can go look for the same thing. We have a lot of tools coming back online, actually, very, very soon. But what I just did, what that information that we have there, how could you go grab the same? How could you generate your own studies? That's kind of the thing we're working through to build there. Yeah. Well, I think the idea is when you're sitting at home on a Zoom meeting, nobody notices if you smell bad or not. For all you guys know, I could just stink, right? But if you have to go somewhere, all of a sudden people would, well, let me get a little bit of spray on there, and I can't have the cheap stuff. Got to buy the nice Burberry smells and stuff. That's a little Calvin Klein action. Not me. You know the trick? You just go to Walmart and you get that body wash, mix two of them together, shake your hands up. Nobody will be able to tell the difference, man. $6, you're out the door smelling like $1 million. Keep your dough straight. Tip of the day. Do you believe any particular sectors will hold up during the 10% pullback? Utilities, semiconductors, well, semiconductors aren't a sector. Utilities obviously have the best chance of doing that. It depends on if the pullback comes with interest rates tapering. I'm not going to say they have the best chance, actually. If I had to bet on any sector holding up, you have to pick consumer staples. You know, you'd have to assume that because you can already see people running towards that sector a little bit. Real estate is interesting, but real estate, the sector, is turning more into commercial and like tech industrial type REITs. It's becoming less apartments and, you know, I can't think of the name off the top of my head, but the company that buys homes from banks and then rents them out. I think Buffett owns a piece of it. It's becoming less of that, so I would say that, yeah, if I had to pick. Support places for Alibaba. You really hope at this point, right? Here's your waterfall drop. So there's two things. People look for the waterfall drops and they attempt to buy them. You'd recognize the point by where the volume peaks. So volume has peaked. You'd assume that that's the bottom. Next step from here is a higher low. If the stock just pulls back a few days, very normal. That is not a sellable pullback. In other words, if you had been looking to sell or short the stock, you do not short the first decline after a climactic decline. That's the way, or parabolic decline. So you'd fully expect this to make a higher low and not test this prior low after being so extended. That'd be my stance on it. I would stick with the stats on that one. Tour of the new place. It's a whole lot of nothing at the moment, but yeah, as we get something built, we've ordered a bunch of stuff to get the closing beat set up and running. It'll be here next week, so yeah, we'll do that soon. Oh yeah. Yeah, I forget who it was that said that, Chris. One of the retailers said they did well thanks to the below the Zoom call sales, like meaning, you know, they actually sold pants for a change. That was funny how they worded that on their transcript I was reading through. Maybe it was Kohl's or TJ Maxx, but I thought that was funny. Yeah. Oh, yeah. Well, hey, don't step away, right? You now have, well, first of all, we have the class tonight. That'll be great. I'm looking forward to that. But going into September, we now have, how are we going to spend $3.5 trillion? There's going to be a lot going on in September this month. I mean, we're not there yet, but I mean, there's so much on the plate coming through Washington, obviously happening around the world, with the Fed as well. It's one of those, we're setting the tone for a busy month there. So stick around. We'll cover it all. I appreciate you guys hanging out with us. And yeah, I'll see, if you're one of our clients, I'll see you later on Wine and Wealth, probably tonight, a little whiskey and wealth apparently. And we'll talk later. Enjoy the rest of your day. Thanks for watching.